Welcome back to the Command Your Brand Show. I am your host, Jeremy Ryan Slate, the CEO and co-founder of Command Your Brand. We help brands to make a big impact using new media. You can grab our new book over at bestpodcastbook.com. And a reminder, if you're brand new to this channel, to like this video, leave us a comment, and smash that subscribe button if you want to command your brand. And today we have a very cool guest with us today, Annie Dickerson. Welcome to the show.
Thank you so much, Jeremy. I'm thrilled to be here with you and your listeners today.
So for people that may not, be familiar with you and what you do, tell us a little bit about who you are and what you do.
Well, so I'm what they call a real estate investing expert these days, but I never set out to be one. In fact, if you had told me growing up that I would be investing in real estate, I would have thought you were crazy. I thought you had the wrong person, because all through growing up, my parents rented. We never even bought a house. So I didn't even know what it was like to live in a single family home. We always paid our rent checks to somebody. I don't know, a landlord. I didn't know who those rent checks were going to. It never even occurred to me that there was somebody on the other side of that. But, after college, my husband and I bought our first duplex. And it was a genius. It was almost like we were playing Monopoly, but in real life. We were living in one unit and renting out the other. And we thought, oh, this is so great. We can get our money to work with for us. Somebody else who's paying the rent can help pay down our mortgage. And so that kind of got our wheels turning in this whole real estate investing space. And we went from house hacking, which is what that's called. We actually house hacked 4 different properties. We called them Alpha, Bravo, Charlie, and Delta. And so we were collecting the alphabet. And then we started investing out of state. And once we did that, we realized the whole world opened up to us. And very quickly, we then bought Echo, Foxtrot, golf, and hotel. But then things started to break down. And that's when I realized that maybe this active landlord thing wasn't the best fit, especially as we had a growing family. And so that's when I transitioned to something called passive real estate investing through group investments or real estate syndications, which is what we focus on now at Good Egg Investments, helping people who want to put their money into real estate but don't want to be landlords.
So let me ask you this, because people listening to this, I'm sure this is either something they are doing or they want to get into or they're interested. What were some of those problems you're having? I'm very interested to hear what those things you were running into were, because I'm sure people out there are like, ooh, that kind of sounds like me, or I'm getting close to that.
When you're house hacking, you're living under the same roof as your tenants. And so we got to know them. They were our friends. If anything broke down in the unit, they would tell us because we were living in the same space. But when we started investing long distance, we started running into issues that we had never experienced before. And even though we had property management, sort of the boots on the ground there in those locations to take care of the properties, we were coming across things like vandalism, theft. We had to start evicting people. It was gut-wrenching. It was really hard to sort of build up that skill of managing those properties, even though we had a property manager in place. And so I'll give you a great example.
Sure.
We had this fourplex in Huntsville.
What's a fourplex? Is that like a home with 4 spaces?
Exactly. So 4 separate units, all under one roof. And so there was one tenant in this fourplex that hadn't been paying the rent for months and months. And as a landlord, I should have
even
actually...
tougher now too, as laws have changed.
Oh yeah, absolutely.
Anyway, that's neither here nor there. Continue.
Yeah. So they hadn't been paying for months and months, one excuse after another, and I didn't have the heart to throw them out. But eventually, the property manager said, you're actually losing money on this property. We should consider starting the eviction process. So we did. And so the day before the sheriff was set to show up, the property manager calls me and she says, well, I've got good news and bad news. She said, the good news is that tenant left, so we don't have to file the formal eviction. And I said, great. That's great news. What's the bad news? And she said, well, before she left, she stopped up all the... tubs and the sinks in her unit. She left the water running and then she took off. And by the time anybody knew what was going on, she had flooded not just her unit, but the unit next door to that and the unit next door to that. So 3 of the 4 units in this fourplex were damaged. And so then we had to, because this was humid Huntsville, Alabama in the summer, we had to let those units dry for several weeks before we could even go in and make the repairs. And
Right,
so
we just
I
had our
learned a
bathroom remodel because we had a
ton. Ooh,
terrible leak, and I'm having like
yeah.
servo-pro nightmare memories of my house.
Yeah.
So anyway, continue.
Yep. And so that whole summer, I spent a lot of time on the phone with not only my property manager, but insurance, various vendors, trying to figure this whole thing out. We had to front the costs of the repairs, tens of thousands of dollars we didn't expect to need to put into the property. And so it taught me that, okay, this whole landlord thing, while it looks good on paper, in reality, things can change at the drop of a hat and cause me a lot more hassle and headaches and time commitments than I was ready for.
So let me ask you this, Annie. I do want to talk more about syndication in just a couple of minutes, but there's so many options out there. And I guess when you look at it, like, how do you decide what's the right type of real estate investing for you? And even if real estate investing is right for you, because maybe it's not right for everyone.
Yeah, that's an excellent question. And so I would say first is to decide if real estate investing is right for you. So figure out, what are your investing goals? What are you trying to do with your money? How much money do you have to invest? And what other things have you already invested in? Maybe you're already in the stock market and you're looking to diversify outside of that into real estate. Or maybe you have no investing experience and you want to invest in real estate because it's a physical, tangible asset that you can touch and feel and see. So kind of getting a gut check on, why is it that you're invested or you're interested in real estate in the first place, I think is a wise move. And then from there, once you've decided that real estate is a good fit for you, then I would say the next question to ask yourself is how much involvement and control that you actually want to have in your investment. Do you want to roll up your sleeves and learn it all from the ground up, which is actually how we started with our first duplex. We bought it out of foreclosure and the basement used to be a brothel. So we literally rolled up our sleeves and we had a ton of cleaning to do. We ripped out the kitchen. We did a ton of things down there in that basement unit. And we really cut our teeth on renovating that property. And so if that's you and you have time and energy and interest to do that, then active real estate investing might be for you. You want that control. You want more of a say in the direction and vision of that investment. But if you're on the flip side, you're like, well, I want to diversify. I have this pile of money, but I really don't want to have anything to do with managing the asset. I don't want to do any work. I just want to make sure my money is working for me in real estate. Then maybe passive investing is a better way to go. Syndications are certainly a way to do that, but there's other ways to invest passively in real estate as well.
So in terms of syndication, what does that mean? And how do we get into a strategy like that? Or how do we decide if it's right for us?
At the very core, a syndication is just a fancy term for a group investment. And so real estate syndication, instead of you taking, let's say, $50,000 of your own money and putting it into a single rental property, you might say, well, I actually want to put this into, a commercial property, like an apartment community. So then you put in 50,000, I put in 50,000, somebody else puts in 100,000, somebody else puts in 25K, and so on and so forth. And now we've got a pooling of resources, and all of a sudden we don't have just 50,000, we have millions of dollars. So it's too much to buy a single family home, which is why we venture into commercial real estate. And so we buy something like an apartment community. And so then once we buy that, then you and I, as a passive investor in this example, there's no work for us to do on a day-to-day basis, because the sponsor or the operator, they're doing the heavy lifting of the day-to-day management. They're dealing with evictions and tenant screenings and turnovers and renovations and all the stuff that needs to be done to ensure the success of that asset and the performance. And so they're doing all the heavy lifting. We, as passive investors, get updates on the regular. So every month, every quarter, we get detailed reports, as well as cash flow distributions along the way. And then at the end, when the asset sells, usually in about 3 to 5 years, then we'd get our original investment back plus a portion of the proceeds from the sale. So it's a great way for us to participate in both the cash flow and the upside potential without really having to do much work. So it's an easy way to diversify into multiple markets, multiple types of assets and business plans.
There's so many questions I have on this, but I guess like looking at it, first of all, like, how do you decide which syndication opportunity is the right one? Like, what things are you looking at? What are you weighing? Like, what things are you looking at to decide if an opportunity is right?
Personally, and now pretty much my whole portfolio is in passive investments now. After we built up a portfolio of about 30 doors in active rental properties. And once we discovered passive investing, we actually sold off all our rentals and moved it all into passive investing because it's a much better fit for our family at this phase of life. So as a passive investor myself, when I'm looking for potential opportunities, I actually don't look for, let's say, a specific market or a specific type of asset. I'm actually looking first at the people, because the team who's going to be operating the asset, that's the most important factor in the investment, in my opinion. Because anybody can take a great investment and drive it into the ground, but a great team will actually be able to take any investment, whether it starts out great or it starts out a dump, and they can actually turn that into a great investment because they have strong experience. They've navigated many market cycles before, and they just have that. They've been around the block a time or two. And so that's what I'm looking for as a passive investor. I'm looking for those strong teams. And I know that when they bring me a deal to invest in, I know that they've already done a lot of stringent testing on that. They're pretty sure that they can make that asset perform. And so I'm really trusting in them and their experience first and foremost.
And I guess when you're looking at the sort of return that you're looking to get, because I'm sure this is something people listening are considering, like, is this something that like you're hoping to get a return in your first year, your first couple years? And at the same time, is there a certain rate of return that you're looking for to make sure that like, well, this is the, more valuable place to spend my money?
Yeah, so this is a very commonly asked question because people want to know, if I put in, let's say, $50K, how much am I going to get back? And because you're trying to compare that versus a stock market investment, right, or any other type of investment you're making, right? So on the very high level, what we're aiming to do, most of our investments, and different syndication companies do this different ways, but most of our investments, we're aiming to roughly double your money in about 5 years' time. So what that looks like is if you were to invest $50,000 today, it would be in the investment for about 5 years. Mm-hmm. And during that 5 years, every quarter, you would be getting some amount of cash flow distributions. Usually it's a lower amount in the early years as we're stabilizing the property, and then it grows.
Reinvesting those distributions, or are they pocketing those distributions, or what are they doing?
Yeah. So usually they're coming right into your bank account, or if you're investing with the retirement fund, they're going back into your retirement fund. Or
something like that.
Yeah. And so they're passive income, essentially, for you, passive income distributions. And so during the life of the investment, you're getting those distributions to the tune of about 6 to 8% per year. On average. Again, that's lower in the first few years, and it grows toward the end of the investment. And then when it sells, then you're getting another typically 30, 40, 50, 60%, depending on how the market is and how much we can sell the property for. And so all in all, if you put in 50K, we're aiming at the end of the day with the cash flow distributions and the profit from the sale, we're aiming to give you back a total of, let's say, 75 to 100,000 after 5 years.
So let me ask you this. So I love chickens. I have 24 of them. And I have a border collie that her job is to watch the chickens. There's certain things that when she starts doing them, I know that means there's a fox in the yard and I know she's got to go handle that. So let me ask you, like, in all the time you've been watching investment, what things do you look for that tells you something's wrong? And I guess what actions that make you cause for you, I guess.
That is such a good question. I used to have a border collie too. She used to herd my kids. She would just chase them around the house.
She's a chicken herding border collie.
Right? Yeah. But I love that because with every investment, there's always going to be signs here and there. And I would say one of the biggest ones is communication breakdowns. So real estate is a team sport. Whether you are investing in a rental property on your own or you're investing in a bigger syndication, there's always multiple people involved. And so for us, often we have partners in these respective markets that we're investing in. And so the first sign that something may be going awry is if the communication starts to break down between us and the partners or the partners and the property managers, or something's not quite adding up. And we've had that happen a few times now with various partnerships. And so now we know what to watch for, but it can be, for example, one of our very first investments, we had the communication breakdown. We were in the dark. We had no idea what was going on. The partner knew everything. And what we realized was actually before we closed on the property, before we acquired it, the appraisal for the property actually came in substantially lower than what the partner had projected, to the tune of, I think, $400,000. Which was significant on this. It was a smaller property.
Sure.
And they actually just kept managing the property according to the original business plan, didn't make any modifications to account for that shortfall. And lo and behold, several months into the investment, we were out of money. There was no more money. We had run out of reserves. We weren't able to pay our vendors. And so the investment was now in trouble. And so, of course, they stopped communicating with us. And so once we found out, then, we had those important conversations and they brought us back into the loop and we were able to work together to figure out a solution. But that communication breakdown, whether it's between partners or even between the syndication company and the investors, that's another place where the communication can break down. That's always going to be a red flag, whether I'm an investor or I'm on the syndication side.
Very cool. Well, Annie, I've really enjoyed this conversation. For people listening, if they want to find out, more about what you're doing and more about how you can help, how's the best way that people watching can connect with you?
So for anybody who's new to passive real estate investing, we've got a great resource for you. It'll walk you through all the ins and outs of what this is all about, whether it's right for you, and how to get started. It's our 7-day email course. It's called Passive Real Estate Investing 101. And so to get that, you can just go to passiveinvesting101.com.
Very cool. Well, Annie Dickerson, thank you so much for hanging out with me today.
Thank you.